Welcome back, everyone, to the Arizona market update. All right, if you are the home buyer or the home seller or even investor, you need to hear this. Okay, this is the big shift has been happening in the market, and it's time for you to strategize. Okay, number one, as you see here on the screen, we have here is the Arizona Comfort Market Index, and um, the market is undergoing a shift. Okay, if you follow my channel, you know the Comfort Market Index is one of the very reliable real estate data that I use to summarize the market. Okay, it's actually the index show that Arizona is slowly moving towards the more balanced market. But what do I mean by saying balanced market? Okay, it's basically the buyers and the seller has negotiation power equally. Okay, and specifically some area gonna remain strong for the seller. As you see here, 53% of the cities across Maricopa County is in the seller market. We're looking at some of the cities like Mesa, Gilbert, Green Creek, Tempe, and Chandler. Those are mainly, surprisingly, in kind of the same area, right? Southeast Valley, right? And some other may be more favorable to the buyer's market in the blue one, okay? With including the five cities, Maricopa, Buckeye, Surprise. Um, those are the one that is outskirt and significantly shift to the buyer side. There's only three cities that in the balanced market out of the 17 cities of Maricopa County, okay? But here's the catch, okay? As you see here, the average CMI out of all the 17 cities is only negative 0.2%, okay? Uh, that considered to last week is positive 4.3%, okay? So this dip could be a temporary or it could be an ongoing. We're gonna come back next week and look at more data and tell you whether uh, it is a trend or it's just a noise in the long-term signal. All right. But as of right now, let me summarize this stream. Okay, we have 9 cities that in the seller's market in Maricopa County, 5 is in the buyer's market, and the remaining 3 is in the uh, um, balance market. Sorry about that. All right. So the next one is we're gonna go into talk about a couple cities in Arizona. Now, first off, let's talk about a couple hot cities in Maricopa County. We have Chandler. This is actually one of the strongest markets right now. Okay, if we look at the supply number of Chandler area, you have only 3.8 months of supply. This means if assuming there's no new available houses for sale in Chandler, there's gonna be it's only take about 3.8 months to get everyone sold. Okay, and here's a trend, right? It's likely to drop below 3 months very soon. The demand in China is very strong. I think one of the reasons is that the amount of job available in China is so high with a lot of technology company, as well as the convenient factor in the China area, including restaurants and groceries and a lot of other things as well. Okay, Mesa and Gilbert is actually below it. Okay, it's increased actually 10% in comfort market index compared to the previous months. Okay, that means a lot of people interested in buying houses in Mesa and Gilbert. Surprisingly, I think the people looking at Gilbert and Mesa because they cannot competing with the buyers available in Chandler, right? Because those are the cities that very close to Chandler area. Next two is Phoenix and Scottsdale. These are the one that hold a steady and slightly have a gain in demand. So this is right there in the middle. Okay, we are going to look at the other cooler market. Okay, Maricopa. This is the most struggling market right here. Okay, this is the most struggling with inventory which actually already climbed up to 9 months of supply, a level that we haven't seen since 2008. Okay, and as you know, 2008 is the housing crisis, right? So pricing actually dropping in this area. Median sale price is now down to about 350,000 already, and the peak is 420, 419, 990 if you want to know exactly in 2022. So Maricopa, uh, as of right now, if you're buying in Maricopa, you have the strongest negotiation in the buyers. Okay, Buckeye and Surprise follow. The buyer demand is also fading, and it's gonna be making a similar situation for Maricopa County. I'm sorry, Maricopa City. The seller is gonna be really difficult to negotiate in this market. Okay. Um, the next information that I want to talk about is Phoenix and versus the national home. Okay, according to the S&B Schiller Home Price Index. Okay, this is the index a little bit different than the Comfort Market Index because it show the national. Okay, Phoenix actually the red line right here only have 0.01%. 0.01, that means it's lower 0.01. Okay, price increase last month. Okay, pretty much not changing at all. Pretty much not changing at all. And I think, I'm sorry, this is not the right chart here. But it's basically represent the whole year of 2024 is not so much different. Okay. Is actually landing Phoenix, Arizona is actually landing at a 7th place national and well below the national average of 3.8 year over year. Okay, so on the average on the national level, home prices actually increased 3.8%. Okay, price trend to watch. In the short term, last month, 5 cities in the US saw price gain, but Phoenix growth hasn't was flat. Okay, so 5 cities in the US see the growth in home price, but Phoenix, we strong. We don't change anything. Okay, in the long term, year over year. Okay, if you look at compared to previous year, Phoenix home price is actually only up about 1.6%, less than half of the national average. As I told you, the national average is 3.8%. Okay, what driving the slowdown? Some of you might ask, what is the reason? Okay, some of the information, for example, high inventory in some cities. We're talking about Maricopa or Buckeye. Those are the cities that are leading the price decline. Surprisingly, those are the area that has a lot of new build construction activities, and we are going to talk about that in a moment soon. Okay, but surprisingly, those are the area that has a high number of new build construction, new build houses in Maricopa County. We're also talking about higher mortgage rate. Okay, keeping the buyers on the side and don't want to make the move. Also, something that happening very recent is a rising in insurance cost. Okay, that particularly in the Phoenix area, that's impacting affordability. If you have a home, you will know that because the insurance company already contacted you and said, hey, we're gonna increase the insurance. If you're buying a new house, you're probably asking why my insurance quote is so high compared to my friends, to my family member. It is because the insurance company actually increase the insurance costs in Phoenix, Arizona. Okay. On a side note, for the seller, if you are looking to sell, okay, my recommendation is because of this situation, you have to price very competitively, as the buyers has more options in Phoenix area, and for the buyers, expect to have some room for negotiation, but it's not going to be anywhere. Okay, it's only some. If you are in a Chandler area, for example, if you are in the Mesa Gilbert area, for example, you may have a difficult to negotiate. Okay, but if you are looking for houses in Maricopa or Buckeye, or maybe even Surprise, you have a strong negotiation there. Okay, and last but not least, you do have to beware of the insurance costs. Perhaps that should be one of the first things you do when you are under contract with home, to find out exactly how much it costs you to do the home insurance. so that you don't see any surprises. Okay. Next slide. I want to talk about the construction. Okay. So here is the new construction challenge. Okay. As you see here in 2023, okay, 28% of new homes share compared to 72% of the existing home, the blue line right here. In 2024, the home share, the new home is only 24%, and the existing home is 76%. 2025 predicting that the new build construction is actually even scaled back. So why is that happening? It's actually have for some reason a lower demand for the new home. The market share of new homes fell, and obviously you see, and the higher tariff on building materials. The builder is actually choose to produce less amount of homes on the market because they actually have a higher cost now due to the higher tariff on material from Canada and Mexico and China, as you know. Okay. And the third reason is the labor shortage. Okay. The potential crackdown on the worker. Right. With the new rule and new law in place, there's a lot of construction people actually no longer be able to work. Right. And it's going to be harder for the builder to find the employee, okay, to be able to build as fast as they want. And therefore, whoever remain gonna charge them more, and therefore the cost gonna be more for the home builder. Okay, so what does that mean for the buyer and the seller? If new home construction slow down, this is actually a good sign for the home seller because it's less competition, right? Think about it. And it's gonna help with the sale price, right? Because if there's not a lot of available new houses on the market, the resales gonna have more chance to sell the house. Okay. If the labor shortage, however, continue and the construction times increase, the builder may pass higher costs on to the buyer. So the buyer, be careful that if you like new build, if you like new house, perhaps this is the right time before the price for the new home increase more than what you expected. Okay. The bottom line of this, okay, expect less new home supply in the coming months, which could make existing home more valuable. Okay, when there is a lack of something, that one is gonna be even more pricey, right? Next slide. Should you buy or you sell in this market? All right. So if you're thinking about buying, it's not an easy answer. Right, so that's the reason why I have to separate them out. If you are thinking about buying, you can buy in some area like Maricopa, Buckeye, or Surprise, where you have a strong negotiation power in those markets. Okay, but you do, like I said, you have to be careful of the higher insurance costs, and then you have to factor into, like I said, as soon as you get into the contract, you have to get the quote right away to avoid any surprises. People normally went under contract and they saw, let me go find the inspector. Let me go find the loan options. Let me go find the appraiser. And last, they don't worry too much about the home insurance until the last day or the last week, right? And they find out that the insurance cost is $500 a month or $1,000 a month, which is crazily high, right? So don't let yourself into that. Check your insurance code during inspection period. Okay. Lock in mortgage rate as soon as possible. Talk to your loan officer. Consult with them to see whether it is a good time to lock in as early as possible in the under contract process. Because the mortgage rate right now is very change a lot, rapidly change, right? So you don't know, you never know what happened to the interest rate next day. Okay, so those are the three things that you should consider when you're thinking about buying. What about selling? Okay, if you have a house in Chandler, Mesa, Gilbert, there shouldn't be any problem with you to sell the house. Okay, it's super hard market right now. Okay, but you have to still price competitively, regardless of the markets, because even if you have the leverage, right, because of the high demand, for example, Chandler Mesa Gilbert, overpriced will turn away the potential buyers. They're not going to look at those situations. They're not going to look at the houses that overpriced is. Okay, so be pricing competitive, and the home value has to be matching with the condition of the property as well, not just what you think, but rather the condition of the market and the condition of the property itself. When you do marketing, you have to highlight the home value and the home equity. So to be able to make sure that the buyers see that, and then that's the benefit for them. Okay. Next slide. This is the prediction for the 3 or 6 months. Let's see what's happening. Okay. No one can know the market for sure. Okay. But one can see is that the mortgage rate. Now, if the mortgage rate fall, okay, we're expecting to have more buyer activities for sure, because a lot of people right now, the number one concern that they have is pricing is so high, and number two is interest rate is so high. Okay, but at the end of the day, even the two concern, right, is the same. It's the same because technically it's financial, right? So if the interest rate goes down, then a lot of people are going to come back into the market, and you know what, because of the higher demand, the home price is going to go higher. Okay. However, if the rates stay high, okay, so obviously it could go down, it could go up, right? If it goes up, then the demand gonna still in a low level. Okay, it means the market can be keeping more balance, and the negotiation come back into the game, right? The buyer has to negotiate for the best deal, and the seller has to negotiate. On the side note, if the new home construction slows significantly, okay, expecting the resale homes to rise. That's what I'm saying. If the new home construction has a problem with producing the product, producing the price, producing the home due to the high cost in labor and material, then the resale market, resale home could have an increase in price. Okay, Arizona real estate market is shifting. Okay, some cities favor seller, but other like Maricopa and Buckeye is still in the buyer's market. Okay, well, thank you so much everyone for watching today's episode, and I'm glad that you are here. Hopefully, if you feel the information is useful, feel free to share with anyone, and subscribe to get more information about the market.